Okay, it looks like we have a critical mass, so let's go ahead and get started. Thanks to everyone for joining today. My name is Micah Zuckerman. I lead the investor relations team here at AngelList. If you're not familiar with AngelList, our mission is to accelerate the rate of innovation in the world. And our core belief is that startups are the most important drivers of innovation. Or we like to say around here, startups are here to save the world. What we do here at AngelList is build the infrastructure to power the startup economy. And more specifically, what we do is build the tools that the most exciting emerging managers and venture capital use to launch, run, and scale their funds. And this includes our guest today, Lake Dai, who I could not be more excited to talk to. Before we get our conversation started, just a couple of housekeeping notes. I want to make sure everyone knows we are going to have a little bit of time for Q&A at the end. Please feel free to submit questions throughout the session in the chat box. If you can't stay for the entire session, not to worry, we are going to send a recording link around to all of the registrants afterwards. So let's get to our guest today, Lake Dai, founder and managing partner of Sancus Ventures. A word about Sancus Ventures. They take a high conviction, thesis-driven approach to investing in foundational software technologies that will fuel the next wave of AI adoption. This includes data infrastructure, compute infrastructure, AI orchestration, AI governance, AI native super apps. In other words, the backbone of a multi-trillion-dollar market opportunity. What Lake and her team do is identify early trends and winning teams, investing in their portfolio companies' first round, then following up with preemptive rounds as the companies de-risk, which lets them achieve near first round pricing. But also add Sancus Ventures was recently selected for investment by AngelList Systematic Funded Funds, which puts them in the top percentage of over 1,300 venture managers on the platform. Introduce Lake Dai. Lake, you'll forgive me in advance. I have to only read part of your resume or we'll run out of time.
Yeah.
Lake is a seasoned VC with a proven ability to identify impact technology winners across cycles. Lake held pivotal early roles at Alibaba, Yahoo Search, and more. He has more than 2 decades of technology leadership experience in machine learning innovation in Silicon Valley. 10 years of venture investing, where he has top decile returns. We're talking at 13.6x PVPI, 10.7 DPI, and he has $250 million in AUM. He also somehow finds time to serve as an adjunct professor at Carnegie Mellon University. He gives keynote addresses around the world, and in case that's not enough, he also holds multiple AI patents. So, Lake, welcome. Thanks for taking some time to do this. Are you ready to jump into the question?
I am, and thank you for reading my long bio. I really appreciate it.
Much longer, as you know, so we found a way to slow it down to the important part. Speaking of your bio, I want to focus first on your early career. You were one of the early employees in Alibaba, where you led the first product team to develop the B2B marketplace. You were head of search at Yahoo China. You've been a founding member at multiple tech startups. When you think about the early part of your career, I'm interested in knowing what first intrigued you about venture capital and led you to start.
Yeah, it's interesting because my journey was, as you mentioned, that I joined a lot of companies in Apple, Yahoo, and Alibaba when their stock was in cents or 10 of cents. And a lot of people actually just asked me if I have to stay at Alibaba or any of the companies that I work for. I'm pretty well off, just from the stock equity. But in my heart, I'm always like very drawn to startups. So when I worked for Apple, I was, we only have 19 people in entire Asia. Alibaba, I joined 6 months within inception, and same as all other companies. So I think in heart, I'm a startup person. And after Yahoo, I started building companies. And during the process, I had interactions with investors. And it was very new to me because I actually didn't really understand how capital works. I didn't know how to raise money. I didn't know how to communicate to investors. And I also had experience, and by the way, this is 20 years ago. I feel like, you know, very few VC firm at the time have delivered on their promised value, and many of them really didn't understand technology and have never really built startups before. So as I continue to work in the startup world, and then realize that even though some of the tide has changed, that there are more and more operators becoming VCs, but still we're in need of, number one, we need to really understand the deep tech space and have actually hands-on build those large scale infrastructure from day one. Basically, the one that you invested, you have built from day one, that has been used by hundreds of millions. And also, I think, how do we create real values, right? So it's not just general how to build a startup, how to be a leader, general kind of advice, but really importantly, how do you provide a critical value for those startup founders at the stage that you invested. So I just decided to build a firm that I would like to raise money from when I was a founder. And I think that was shared with anybody on the investment team of Sancus.
That's great. Like, I would add to that, I think it warrants covering that you also act as a mentor to a lot of founders, and
Yeah.
a lot of our junior team
Yeah.
The present day. I mentioned that you also teach at Carnegie Mellon. You teach a course on applied AI. You've shown me your syllabus, and it's expansive. Let me know if any of this is off, but you teach generative AI, LLM, distributed computing, AI applications, AI alignment, and ethics.
Yeah.
I assume you're not doing all of this for the money. Tell us what inspires you to add this work to your plate, and how it relates to what you do at Sancus Ventures.
How's it related to Sancus Ventures? Well, a couple things. I think, going back to why I'm teaching at CMU. So first of all, I love teaching. So as technology continues to evolve, I believe it's really essential to teach students something really useful, how to build AI in the real world. How does it connect to Sancus? And so I would say eventually what's happening is that, number one, that being AI professor at Carnegie Mellon over 9 years, it really allows me to see where the AI trends are. So we're not only just working within the CMU, we work with Stanford, works with MIT, and work with Berkeley, all the other universities that are advanced in research in AI. So that really helps me to see where the trends are from academia's point of view. And second is that by choice, I didn't want to teach theoretical computer science at CMU. What I want to do is I want to teach real world applications. So part of my course is really focused on how do we build and tone machine learning models for real world problems. So for example, manufacturing, retail, healthcare, finance. And then it is also very important to co-teach with industry leaders. So every year I have about 10 to 20 industry leaders who are CIOs, CTOs from either Fortune 500 companies, or the tech leaders like a Google, NVIDIA, or the startups working on those real problems. So it's kind of interesting way that we co-teaching. So it's a conversation, and then we demonstrate the use cases, or we work with students to solve the real problems. So I think that network, over the years, if you think about on average 15 guest speakers per year, and I barely have a repeat same guest speakers. And so over 9 years, that's over 100 CTOs, CIOs, and startup founders. So that's also very helpful for us to have the pulse of the industry and also have the network continue to be helpful to our portfolio companies.
That's great. And you've shared in the past some of your guest speakers, and I'll just say that's a pretty impressive list of people. It speaks a lot to the network that you built over time.
Yeah.
want to switch gears a little bit and talk about your area of expertise. Over the last few years, AI has become the topic that everyone is talking about, particularly in tech, but really all over the world and in regular households. Um, One data point for the audience today, in our recent State of Venture report, what we saw is that nearly a third of seed deals um, on the AngelList platform were into companies that identified as AI companies, which massively outpaces any other subject matter, right? It's bigger than fintech, bigger than crypto.
Yeah.
Like, help us understand the current moment. Given your expertise, what has happened over the last few years that has led us to where we are today?
No, I'm actually surprised. It's only one third, not over half. Um, so I think what's interesting is that in 2016, I saw a pivoting point for AI development. So for us who have been operators in machine learning space, we all know that been using machine learning, large language model way back then ChatGPT launched it, right? So ChatGPT is very successful product, make the mass media and then everyday consumers understand how important AI is, how powerful it could be. But behind the scene, there are three major, I will say, pivoting moments, and then or resources. Number one is that the availability of the data. So in order to make AI accelerate, there are data, compute, and algorithm, the three key elements. So if you think about in terms of data, the explosion of digital data really provides so much information. So now we have smartphones, smart devices, and we have Ring in front of our door, and everywhere we talk, and then we take notes. So massive amount of data in the format of text, video, images, and the video. So that's provide a lot of, I would say, materials for training. But 2016 is pivoting point is I think those are the moments that we can see GPU start really accelerated. That we saw, previously most people understand NVIDIA as a gaming chip company, right? And or maybe there's some crypto usage, but that's the year, and I think I believe that at the time the NVIDIA stock price is somewhere between $40 to $60 before split. And then we start really seeing the AI startups and the AI companies are creating use cases using distributed computing, using parallel computing GPUs. So that's really important because increasing computing power and especially more powerful GPUs have made it possible to train and deploy complex AI models. And then the other thing is algorithm as well. So as we know that continue, we see CNN, RNN, reinforcement learning. We saw all different new methodologies to continue to train the model, not only on the training side but also inference side, to be more efficient. I think I'm quite excited. I think over the last 8 years, we're seeing a lot of breakthrough algorithm development on training side, and now we're seeing more on the inference side. So quite interesting and exciting time for us.
Yeah, no doubt. I want to dive in and give the people what they want here. Given your expertise and given how much noise and hype is out there, you said it won't surprise you if more than half of the companies, at least on AngelList, were identifying as AI companies. And
Yeah.
I think it's safe to assume that some are doing that because it improves their chances of fundraising.
Yeah.
Help us cut through the noise. What industries are you excited about? What applications are you excited about? What
Yeah.
do you think is out there right now that's going to change the world?
Yeah, it's actually quite interesting because we see uh, maybe because of the nature of Sancus, because we invested in so much in software infrastructure and software building blocks. So I would say all the company inbound to us, which every year is a few hundred at least, and then most of the companies saying they're AI startups. But at the end of the day, I think there are two different types. If you want to kind of categorize them on a very high level. I will say those are you're going to see companies that are building modules, right? So those ones that if you think about, we can call it AI, we call it machine learning, or even blockchain. If you look at down there's something very general, which is how do we deal with data? What is data infrastructure, right? How do we deal with compute? And we all know that demand for compute is higher and higher. Actually, with the reduction on the compute price, make compute actually even more accessible. So overall, we're going to see more and more compute demand. And then we'll see so many different, I would say, providers in being foundation models, being APIs, being cloud. What's happening is a lot of startups today, particularly on the application layer, are actually testing 30 to 40 models simultaneously. So it is very difficult for them, if they're not extremely technical, to kind of orchestrate and manage this. So for enterprise, for example, when can I use which model that meet my current business need, right? So those are the examples we're talking about, the building modules. So the other type of a startup that more of the application side, which means that now I have this more and more enhanced, more available in the building to developer tools or infra modules, then now I can build everything so much quicker. So then they're trying to address the issues in the market. So when we're looking at the startup in those two different categories, it is really important to understand the strengths of each category. So for example, on the building modules, then you want to understand whether there's technology differentiation, whether they have data modes, whether they have data network effects. And then on the application side, because they're very close to consumer, for example, customers, in this case, I think it's more and more important for those startups to have strong brand, customer loyalty, and then also understand how to use scalable and reliable and efficient infrastructure tools. But end of the day, I will say, regardless what kind of startup you're building, it's all about the founders, right? We also say it's all about the founders. One thing I will say is that when we're looking at a startup, and you have the track, which means where you're operating, where you're building the company. You have the horse, which is where you're building, and then you have the jockey, which the founders actually are managing control because it's such fast moving environment. So hope that answers your question.
It does. I would love to spend a couple of more minutes on it, because what I know from our many conversations together is that the effort you put into not only identifying founders that you feel like you can bet on, but also supporting them, helping them meet other founders and developers. Talk to us a little bit about your strategy for doing that and how you approach it, because I think it really is unique to what Sancus does.
Yeah, I think it was interesting. Like people ask us, like, why would your portfolio founders, particularly the ones who have built unicorns or have like hundreds of millions of access, willing to take your money in the first round, and they're willing to create actual rounds for you without even needing cash? So for us, I think, going back to your first question, is that we want to build a firm that we want to raise money from as a founder. So if you're a founder, what do you want? Of course, funding is really important, right? But the other thing is quite interesting is that the real value you can bring to the customers at that stage. For example, we're in pre-seed, we're first round investors, pre-seed to seed. So most of our founders are very technical, and they are exceptional builders. However, when they build a new company, it's also very important for them to have a really good go-to-market partner. So go-to-market doesn't mean that you create a product and then you go out and hope the product to sell. And then you want to get the market signal as early as possible. So many startup founders, that they already have certain network, so they have already verified with some of the people that they know in their network. However, because we build a massive amount of network that particularly are the decision makers buying software, like I said, the CIO, CTO, head of AI, head of cloud, head of infrastructure, head of compliance. As a result, we can get this aggregated signal much, much earlier and more comprehensively. We share this with our founders, and then we a lot of times, I mentioned before, so we have this access, inside access to critical AI releases and deep research insight. It can save the founders months or even more time that we know that, for example, we know some of the directions they should not be going just because they're going to be massive amount of I would say changes in the next few months. It is really important for them to actually understand where to choose that battle. I would say customer validations, spotting trends years early before prominence, and those are, and then we have very large network that the founders helping each other as well. So that I think that's one of the benefit of being a sector fund is all the founders, in our point of view, are the building modules or Lego pieces. They can work really well with each other.
That's certainly true. And I've always been a big fan of the dinners that you host. I think you described it as
Yeah,
getting them together to talk about um,
I know.
it's unique. The other thing that I think is unique about Sancus Ventures is your LP base. There's always been high demand to join your funds, and your LP base is international in scope. It has retail investors, institutional investors, and I happen to know from your discussions that you are somewhat selective in who you allow to invest in. Right? You want people
Yeah.
who fit into the goal. Can you tell us a little bit about how you approach fundraising?
Yeah, I would say fundraising is probably one of the hardest decision when you comes to say, I don't I don't want some money. I want some money, right? So it's almost like going to the startup that you are founder, that you know you have excellent product and you have a confidence in your company. But you also want to say, I need to be very strategic, pick the type of a investor I want to work with. And same thing for LP as well. So for us, I would say we love long, we call it long and kind and strategic. So the ones that basically we're saying that we want to have um, long-term perspective and the patient investors because we're very honest to our investors is that compared to hedge funds or other assets that you have a highly liquid VC asset class is in general a very illiquid asset class. So the patience is important, but of course, then for us as a fund composition that we I think I can share this a little bit. Just within 2.5 years, we already have exits, and then how we invest and how we manage the exit is also very important for us, right? But not only you need to develop a very strong pipeline, great due diligence, portfolio support, but also part of portfolio support is to spot those amazing exit opportunities and actually bridge that as well. Not all portfolio companies will go IPO, but regardless, that I think that's really, really important. So I think for us, at the end of the day, I think the LPs who see this long-term vision, have the long-term vision. When I say kind, it means that LP actually has we have a culture fit as well with mutual respect, and we want to bring also value, not only just financial returns, but also we see whether there's a strategic synergies as well. So as a result, we have a number of multi-billion tech founders, family offices as our LPs. We have a founder fund. We also have, as I mentioned, this very strong network, VPs and CTO, CIOs, and engineering leaders who are not only our portfolios companies customers or due diligence experts, but also they're our LPs as well. So that's basically a composition of our LP basis. And for fund two, we're actually thinking the time the trend actually start moving, we're going to see more and more AI adoptions in the next cycle. So it is also very important for us to see whether we're going to have strategic LPs that can help us with go-to-market. So they can be use case adopters, and they can be go-to-market partners. So that's the type of LP that we love to see to add it to Fund 2.
That's great. Thanks for indulging me in that. I'm always interested in your investor base.
Mm.
The range of investors that you have to talk to, the range of founders that you have to talk to, and be able to tell the story of Sancus Ventures and appeal to many different types of investors, types of portfolio companies. I would love to hear about how, especially going into Fund 2, you've developed the story of Sancus Ventures over time. And in particular, I think younger emerging managers would benefit a lot from hearing what is the journey of developing that story as you mature Sancus and move on to Fund 2.
So what are the I'm sorry. So the question is that how for first time GPs. So what kind of advice I can share to move Fund 1?
Yeah, I did. That's one way of putting it. Mostly, I'm interested in knowing how you have developed a story going from Fund 1 to Fund 2.
Yeah. Okay. Got it. So I think a couple of things. I think different from others. I always think about end goal quite a bit. Like, what is end goal you're building? So are you building one successful portfolio, and what's the next, right? So do you have a goal of building a brand that lasts for a long time? Do you want to build a culture that will last a long time? What kind of team members you're gonna recruit and add to you who are better than you, right? So that's also going back to the company building theory, is that if you're aiming for building a brand that will last decades, if not more, is that the perspective is very different. The one thing I didn't talk about, people often ask me, what does Sancus mean? Sancus actually is a god for trust and credibility, and which is very important for us. I think every step that we have, every interaction we have with founders is the time mark for our reputation and the track record. So at the end of the day, the one that really make our successful is our founders, right? So have this reputation, credibility, and how you truly bring value. How can you be the best investors in your sector is going to carry a very long way. So we care about our reputation within the founder group that we love, and then quite often you can see very strong endorsements by those founders who have worked with tons of branded VC firm out there, and we're the best. And then it's pretty consistent we see from our portfolio companies. I think that's important, I think, for the GPs. Is the reputation, because again, our track record, I'm grateful that for AngelList right now, based on the track record and early signals, that select us as a top performing fund. But I also want to say it's a long game, right? So at the end of the day, that the distribution that we can generate it for our LPs at the end, this is really is the 10 mark and the evaluation. So how do we generate returns for the LPs? Going back to what kind of founders you back? Can you have early access to those founders? Can you actually have the reasonable price, entrance price, allow you to have that returns? And will those founders continue to spread the words to other founders so you have a very strong deal flows? Do you have a very strong team that even you're not there, the team can actually carry the work and bring consistency and reputations to the firm? And can you actually, we have this backup system, is that if I'm gone, and who is the next person, and at this early in Fund 1, we already thought through about this, and who are the other talents in the pipeline. So even though we're still a small fund, we have been thinking about team construction in Fund 3 and Fund 4 as well. Maybe a little too much.
It's not surprising at all. For the audience, I think it's been obvious that we've talked about it. You're coming off an investment career, one that very successful early results. As you go into Fund 2, what have you learned? What worked? What didn't work? Um, what's the next for Sancus?
Yeah, so I think we continue to build on our success, which is we have stellar reputation among the founders. I think we will continue to look into in Fund 2 as we start increasing Fund 2 size, right? So I think that's also a very important thing for GP to consider. How do you increase fund size and how much do you increase the fund size? In my opinion, is less of, oh, let's do 50, let's do 100, let's 150, like all the wrong numbers. And then I think it's really important to think about the fund size to support your current strategy and your strategy for the next fund to allow you to continue build on the success and getting even much better returns for the investors. And that means that what's the check size and what's the desired ownership? What is the guidelines of entrance valuation? How do you work on the your proratas or additional allocations going forward, right? So one of the strategies that we have is that I think most people told us and they never seen in the market, which is we have a first check and then we close monitor the company and we can continue to increase our ownership. So I think going back to Fund 2, what I learned the most is that is operating the funds continue to improve the outcome of potential investment returns. For example, increase ownership, increase more of, I would say, disciplines on the valuation, and that comes with your reputation of fund, right? So if the fund never heard of you, most likely you can only follow. But when the fund become highly reputable, then you actually start taking more of the lead positions. So the last thing I would say for the audience who actually are GPs or investors who want to raise capital, again, it's so important who you raise money from. And as you continue to move from Fund 1 to Fund 2, then you start working with more and more institutional investors who are the due diligence process and timeline is different than when you try to raise money from high net worth individuals.
Got it. Thanks for saying that. I think a lot of our audience will find that valuable. I have just one more question I want to ask you before we jump into the audience questions.
Mm.
We've gotten your perspective, like the venture capital investor and like the expert. As a tech enthusiast, as somebody who's been in these markets for a long time, and not just in AI, but you're a really broad range of experience.
Mm.
What out there in the tech world has you most excited for the next year? It might be the same things we've talked about, but I would love to hear what else is out there that you're looking forward to seeing in the market.
Very consistent. If you ask me, 2016 and 2010, I probably gave you similar answers. Always being AI space. It's we're just using different names back then, right? So it's machine learning, happy. But at the end of the day, my confidence in artificial intelligence and how it's going to impact society and not only just a business but also everyday life is not really based on what has been hyped in the last couple of years. And so there's a very strong belief that, for myself, I think inevitably the technology of AI is going to embed it into every single work that we have, right? So today, for example, even you and me are talking right now, that the voice that has been processed to reduce noise, maybe images that we have been polished a little bit, we now have beautify a camera, right? All the notes has been taken. So it's very difficult today. I think it's also very different from the dot-com hype is that if you're looking into today's AI, it is actually have so much integrations in our life already. However, going back to what's coming the next is that I think we're still barely scratched the surface. So one thing I've noticed, being a builder, go through three different cycles, the internet, the mobile, and the AI cycle, is that you really start to see everything start taking off, and when infrastructure has been fully built out. The reason is at the very beginning, there are some new shining applications that grab everyone's attention. And then when people start using it, for whatever reason, it's not scalable, it's not accurate, it's not affordable, or it's not secure. And people are just like, this is not good, right? So this is just a hype, a scam, and we're not going to stay away from it. That happened during internet stage. That happened to the crypto, the very beginning of the crypto, right? Even for mobility, it's the same thing. If people remember Pearl and BlackBerry at the time, I'm like, who's going to use smartphones? They're really difficult to do it. So it's not because the idea application is not there, it's because the infrastructure and technology was not supported. So now you gave a 2-year-old an iPad, they can start using it immediately, even before they fully mature their speaking language. That's because everything's intuitive. But if you look behind what has been support iPad to be iPad, there's not only just the software operating system, the material science, the gesture, facial recognition. So everything has been embedded, like supported by the whole infra. So what I'm saying is that we continue to see the maturity and continue building of the infra tools and developer tools to the extent is everything is so easy to build. So one of my new favorite applications is Lovable. So Lovable is, when we're talking about vibe coding these days, is the application you can actually use, natural language to instruct to build an application. It's still very simple today, but still it's a game changer. So I show that at my CML class and have students to create simple applications. This is basically, by the way, is collaborated with a former CTO of GitHub and CEO of Cast. And all the students realize that what they had to build in the past for weeks, now they can do in a few minutes. So imagine, I think in the next couple of years, we're going to see that significant change to different industry. Used to be very difficult to break through with deep tech or the AI tech. Now you just use it as a tool set that you can be more productive at significant scale. So that's something I'm super excited about.
That's great. I love that you shared one of your favorite apps right now. I think if you had a list of your favorite apps, it would be certainly follow it. We have some really great audience questions I want to jump into, and the first one, really interesting. Like, how do you assess the long-term defensibility of an AI, or excuse me, an early-stage AI startup?
Yeah. Yeah, so I've been asked this question a lot, not only just as a investor, but also from professors by my students. Like, if we want to build a startup, what should we do? I don't have I would say I don't have the perfect answer for it, but there are a few things I think you can start thinking about. Number one is data modes, right? So data modes right now is quite important. So do you have exclusive data access, particularly to the high quality of or unique data that you have? And then the second is that do you have data network effects? So this is, I think, is really important, particularly for applications, is that as more users, more customers interact with your AI systems, you can gather more data, improving the product performance, and also attracting more customers in the cycle. So product feedback, human loop, product feedback loop is really, really important. The second is, I think, is the technology and algorithm differentiations. So there are proprietary algorithms that develop unique proprietary models, or you can use open source then and customize it. But the key thing is, do you have specialized expertise, right? Can you build deep expertise in a niche or difficult to reach problem area with AI? So, and then the third, I would say the branding as well, the branding, customer loyalty. Do you have the trusted reputation? Do you have a customer logging? The logging means that you have built a system that integrates so deeply in their workflows and so customized to specific needs that create stickiness. And then have you been leveraging all the scalable infrastructure tools? Because in the last cycle for mobility, the super apps that need to be successful, most of them have to build their own infras. So that's why Uber and B&B and some of the vertical, very successful applications, you look into them, they have one of the best infra teams within the organization because they have to build everything themselves. But I think the cycle has changed, right? So as application builder, you look into what are the tools that can really accelerate your growth and building. And then I'll say IP is another very important element. So I think for people who have built IPs before, now is a complete white space. There's so many things that you can create and give you significant entrance barrier. So that's the other thing I think is quite important. That people look into Sancus, like, why do you have co-chair of AI of Quinn Emanuel? Because Quinn Emanuel is the leading IP litigation firms worldwide. And we want to know that, what kind of IPs that we can build, and then how we defend it, how we evaluate it, right? So that's also important. It's not only just building IPs. Are they defendable? Are they valuable? So I think there are a few things as well. And of course, we also talk about in some specific sectors like healthcare and finance, have regulatory and compliance leadership is also very important. So you can navigate regulations, you can make sure that your application is compliant and building defendability through very strong understanding, adaptation to those standards. This is a very long answer, and sorry about that. There are many things people.
No,
yeah.
I think that's exactly what we need to hear. It's hard. It's hard to build defensibility. And portfolio companies have to have a range of approaches to do it. We have a very direct question here, and we talked about some of this, but I think the folks want you to break it down really clearly. You mentioned access to excellent founders and deal flow. What is the secret sauce? What makes Sancus different that lets you be able to get into all of these high-performing deals?
Oh, asking Coca-Cola recipe now. So I think every firm is different, right? So I think a couple of things. Number one is, how do you define high quality deals, high quality founders? That's the first question, right? So so for us, we love the founders with proven track records. So many of them have built strong companies in the past. I don't know if I mentioned that we have 6 unicorn founders in our Fund 1 portfolio company, previously built very successful companies. How do we get access to them is, again, I think the reputations really help us. Couple of things. Number one is that we can really deeply understand what they're building. So when founders came to us and shared that, typically you talk to VC firm, you're going to talk to a scout, and you talk to a partner, and you talk to general partner who bring a specialist, and get to the fourth meeting that you pretty much like they finally understand not only your technology, your differentiation, your mission, your vision. For us, typically, it's like very big, very quick, like the very beginning that we immediately get it, and then the conversation become we call it the brainstorm product roadmap, brainstorm co-engineering in the future. So quite often we got this like literally founders say, well, double your allocation if you can spend a few weeks a week with us. Or for example, like, can we do can you just come to our office every Monday so we can actually brainstorm? So I think that those are quite important, because during this due diligence process, you not only show your deep understanding of what they're building, but also you bring value that they want to be a long-term partner with you. The other thing is we have very immediate, we can bring immediate impact through critical customer introductions. So not only help us to, basically the customers participate in our due diligence process. So not only, we can actually have more sophisticated due diligence, but also the founders make it customers too. So that's also, I would say on the high level is that, but of course that, about execution. And so I would also credit my team because everyone on the investment team of Sancus we all have been founders in the past and who have built the products in the past. So there is immediate, I would say, like love at first sight sometimes that with the founders that you deeply understand what you've been there before. So those are really important and unique for us. And so I think that's just, what I want to share here.
If I'm hearing you right, it sounds like the secret sauce is having really smart people who work really hard. It wouldn't be surprising. Like, I think we have time for one more very short question. So if you had to answer in just a few sentences, what is a contrarian view that you have for the future of AI?
Oh, I don't know which one to start with. So I think when we start Sancus, it was very contrarian. I remember when I was fundraising this is about 3 years ago, fundraising to raise for not the fund that invest in future of AI, but also invested in infra. People's like, that's so niche, and like, why don't you just build a Web3 fund? They're going to put you 10 million in your fund if you can do Web3. So I think against what everyone believes in is contrarian. And of course, there's few directions we're looking at now, and unfortunately, I can't really share. But I think it's also not only just contrarian, but also I think people haven't seen it yet. I can talk about some high level. So for example, how we identify trends. Yes, you can look at publications. There are, so much publications be released, but it's also very important to look into entire, not only macro environment, but also seeing that all the resources are moving. What is the upstream? What's the downstreams? For me, it's very important to look into that we're almost like you have the very beginning, like let's say if you ever hike and you see a little string and you're like, where is the string is going, right? Where is it going to be for sure destination, where it's going? And then what will be potential block during the process? At what timing and what kind of solution can unblock that? So all those things are, I'll say, funny enough, when people talk about, giving our background, we'll probably think so much about technology only. We look into economics cycles, we look into the history in the past, and then we look into pay close attention to geopolitical issues and policies, and we're looking to public sector's policies, because those are all created different forces that give you so much more certainty that where things are going. So
That's helpful. Lake, we are at time. Thank you so much again. It was great to catch up, and I know everyone appreciates the time you put in today. Big thanks to everyone who joined us. We appreciate you taking your time as well. If you want to learn more about Sancus Ventures or stay connected with Lake, you can follow Sancus Ventures on LinkedIn, or you can reach out directly to Lake. The email address is lake@Sancus, that's SANCUS.VC. As I mentioned, we are going to be sharing a recording of this to everyone who registers in the coming days. And quickly, before we wrap up, I just want to point to the poll that should have appeared on your screen. If you could just answer a quick question for us about whether you're interested in learning more about AngelList offerings, we'd appreciate hearing from you. With that, we can wrap. Thanks again.
Thank you very much.
Bye, everyone.
Take care.